traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good. Let's start out talking about the oil market. We're going to use that ETF that we posted yesterday. I want to bring this to your attention for two reasons. One is the fact that it is an ETF that I do not trade, but the reasoning behind it is I trade futures, and there's a huge difference, and I want to point that out to you here. As you can see here, we've had this big move down and this big move up. Well, folks, overnight, that's not what has been happening. It's been a very, very, very wild market. Let me bring this up to you to show you just the last 5 days in the crude oil. For those of you that don't follow it, I recommend you do because it's a great trading vehicle. Follows a number of sequences like most actively traded commodities. But you can see here that we've been here the last several days. We've been right here. We made the ABCD right up here, and we've hit it 1, 2, 3, 4 times. And now we finally started to come down. And the chart looks a little bit blurry. Let's see if we can clean it up a little bit and see where we are. This is all I can do. Hopefully it'll be a little better. And let's check with the TFNN folks to see if it's coming in okay. And if it's not, I'm going to have to continue talking because I think it's an important one to look at. You can do this yourself, folks. If you look at the 15-minute chart, on the crude oil, you'll be able to see what I'm looking at. But if it went up there and you stayed in it with your stop in, you would most probably still be in it because it measured to, 66. And, we were trying to sell it up here in that 46.50 area. I personally was taken out at break even along with some of the other folks. And then the market broke. But here's the important part is that we just didn't give up on that. When that market broke, we kept following it, hoping, that's one of the worst trades you can have is hope. But if you look at this, we were waiting to see if we could get a 382 retracement after the big break. And lo and behold, there it was. And that was $1.20 a barrel, folks. Now, that's almost as much as trying to get the top up in here. So we had a little 135 pattern right there on that 15-minute, missed that one, just didn't quite get filled. And then we had a perfect 382 right to the tick, and it's broken quite a bit, and now we're getting ready to take out the lows. So that's what you've got to do, and that's trade selection. And let me bring another one up that one of our listeners was able to share with us yesterday, and that is the chart of Caterpillar. I want to bring it up here because this is a really important a part of the Dow Jones Industrial Average. And so it's one of the reasons why the Dow is held up as well as it's done. And if you look at Caterpillar, we make a perfect ABCD at the 50% retracement here a year ago, right? In fact, it was the end of dating myself there, the end of 20. So it was in October of 2020, the market made a perfect ABCD right to the tick, within a hair's breadth of the 50% retracement, and then just went ballistic to the upside. And as you can see, it's continued to go up. And not only that, there has been no one that even wants to take profits in this thing. Take a look at what Caterpillar looks like if we blow it up so that you can see what it looks like. Okay, now this is what it's been doing for the last 6 weeks. It hasn't backed off at all. Even with our market going down quite a bit, Caterpillar doesn't care. I imagine it's telling us something about crops for next year. I'm not sure. But look at this. The only thing you have here is you have the 135 pattern, and it just barely makes a perfect correction. Then you finally are in the process of making an ABCD correction up here in the new high ground. Yeah, that's okay. But by golly, it doesn't want to go down very much at all. Now let's look at this on a little bit longer time frame, and the reason why you get a better picture of what the heck you're looking at. So here it is over the last year and a half since a high was made. Let's get it up here so we can see it. You'll see the ABCD very easily. But the reason I bring this up to you is pick something that is easy to trade, boys and girls. Come on. This thing won't go down, so why mess with it? Find something that's swinging. You know, the old Willie Sutton, remember the death of a salesman? Well, Willie Sutton, why did you rob banks? He said, well, sir, that's where the money is. And the money is in volatility. It's not in markets. It stayed in the same range for 6 weeks. Now, up until that time, this thing was moving really nicely, coming down just like it was supposed to. But then it stopped, and then it's been up here. So you want to wait until you get something that is really clear-cut, and then you'll be able to do it. Other than that, you know, gosh, you just don't have the opportunity. Look at the opportunities you had in crude oil itself and some of the other things, the stock indices. So all of those are things that you got to pay attention to, you know, when you're doing these things, and that's part of the selection of what you're doing. That's why I primarily trade, not primarily, exclusively trade, you know, foreign exchange and the futures. That's what I look at. I don't trade stocks at all. And I might do one option a year. And I think the last time I was right on that was in 1938 when I was herding sheep up in Montana. But anyway, you just got to be careful when you pick something that's volatile and actively traded, and you're going to be just fine. Don't pick something that is, you know, really, really quiet or doesn't have any movement at all, because there's no potential either up or down until it breaks out of that range, and then look for the pattern that fits it. That's what I would suggest you do. Now, remember, that's just my suggestion, and whether that means anything or not doesn't make a whole lot of difference, but that's still what's happened. Now, we've got Rich Anderson as our guest here at the break today, but I wanted to bring to your attention here the action that we've had here in the E-mini S&P. And if you'll give me 1 second here, we will get it moving here. Hold on a second. Got to get it back up here, I believe. I think we're okay. Get this going. Nope, just give me 1 second. It's going to take a little bit of time. There we go. Put it up here. Oh, no, I lost a cord. Where did a cord go? Okay, go live. Okay, this is what we've done over the last couple of days. All right, we've had this big breakdown. Okay, now this level right in here is roughly the 50% retracement of the whole move from that October low. October low to the high that we made a week ago, Thursday, when the Fed was in there giving us their chain of thought of what they thought was going to happen. And since that time, you can see the ABCDs formats, and now we've got another ABCD completing up here, possibly in 1873. Now this is the first one right here, and it's held that level all day long at 64, at 38.64, 65 I believe was a high. And if we get above that, we should make 38.73, and that's where we are up at the 1.27 number, and that's the number I'd be looking at. Folks, this market is incredibly bearish. The only way it's going to change is if it explodes and gets above 39.50. Let's take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I have to review the Apple for our friends over in Hong Kong. You'll notice here on the Apple that we did have a really nice downtrending market. You can see the 135 pattern that's noted by the dark trend line that is pointing down. You'll see the arrow on the right. Okay, that's where the stop should have been placed on the long position, but they did not. They actually had the deer in the headlight syndrome where they saw what they were supposed to do and didn't. So what he had to do was to get out early Monday morning, and of course, so far, that's been the right thing to do. Now, the $64 question, and they were asking Matt this morning, what is the probability of this being a double bottom with the one we had back in June? That is certainly a possibility. However, the fact that we have all 3 of these moving down like this, and the last rally only went to the 382, this is highly suspect for being in a bull market anymore because we have lower tops and lower bottoms, and that defines a downtrend. You can see it clearly. There's your lower tops, there's your lower bottoms. I can't see any reason to buy this stock. I know it's the most actively traded and most held stock in the world, and it's got the greatest products in the world, but by golly, we've been there, heard that before. Do you remember I'll always remember this. They should put on my tombstone as an insignia, he never fell for the zero interest rate garbage that they tried to feed us when bonds were 176. And of course, they got the low as 117, and we're in a very, very bearish market in there. So the main thing, folks, is to make sure you put a stop in on these things because you don't know what happens, okay? You know, this morning I had 3 people, very, very smart people, explain to me what happened with the Japanese yen. And I hate to admit this. Well, actually, I'm proud to admit this. I didn't understand what any of them were talking about. And, you know, and I don't need to understand that. All I need to understand is what is price action doing. If prices are selling, there's more sellers. If prices are buying, there are more buyers. That's all I need to know. And so I didn't let it affect me. I was up quite a bit last night because the action was so good. But the problem was, you know, I didn't know what was going on, and people were asking me. You know, Rich Anderson is going to be telling us again what he thinks is going on, and he's a pretty smart guy. So he'll be the 4th one that'll be talking about it. But frankly, what you need to do is to really understand what's happening with price action. Let's look at the Japanese yen today, and you'll see this. This has been we've been talking about this for quite some time. Unfortunately, we were unable to get the Japanese yen short because it never reached those levels. Each time it hit the 382, it missed it by about 10 pips. But you can see here, bada bing, bada boom. Now look where we are now. We're sitting right at the 786 retracement here now. We're actually a little bit below it. We're actually worse than that. Now, some people have told me that, and they said this is a game changer, and maybe it is, but we'll find out. Basically, what I understand, and this is my 2 cents worth, that the Japanese bond market has not been functioning properly for about 5 years. And the reason for that is there's no volatility, there's no liquidity in that market, and that's why it's been very, very difficult. Now, today, with what the Forex minister, or what he called the finance minister, decided to do was to let the yen float against the dollar. And that's what happened there. The dollar dropped and the yen took off, and everything is wonderful in Camelot. We'll see what happens. Now, what I want to do is I want to go back to the charts to try to find what could be happening in the Japanese yen. Now, this is the Japanese yen. This is very, very important to me, folks, because I started this show in 2007. And since that time, I've done over 3,900 shows. But look at this. You see this butterfly bottom down here in 2011? You see it stayed there for a whole year? Well, Mr. Tom O'Brien Sr., his motto during that time, and he sang it, he danced to it. He didn't have it for breakfast, but by golly, his mantra was King Dollar. That means to buy the dollar against the yen. And you can see where we went with that giant ABCD topping up here 10 years later, because the bottom was in 2012, topping right up here. You can see that's where we are now. If you did the long-term monthly on this is a monthly, but if you even went farther back, you'll see that level right up there at that 51 and change, that level was, believe it or not, a 78% retracement of the high that yen made when it was in 1989 when the Nikkei Dow hit 39,000. So that was a really big number. But the key now is, look, in just 2 months, we've broken through the 382 level, just broken through it. That tells you that this thing is going to be moving around. Now, remember that dollar index, the weighting is for the euro to have 53%, okay, and the others are less. And the yen happens to be one of the larger ones, around 13%. So that will affect the dollar. But the pound and the euro are not moving as much. They are moving a lot today. Well, not really. They're moving about 40, 50 pips. But compared to this one, it's nothing at all. But that's where you've got to realize what you're trading. So if you're trading the dollar index, trade the dollar index. If you're trading the mark, trade the mark. the Deutschmark, the euro, which is all part of the Deutschmark now. I started trading the euro, the euro way back in 2000, but the Deutschmark in 1972 when it was 13 cents or 14 cents. And if you bought a Mercedes that was built in Germany, of course, or a Porsche, you were basically long the German mark. So the card never appreciated. Every year it went up. And it kept going up until this day, I guess, mainly because of the depreciation of the U.S. dollar against the mark at that time. Okay, enough of history, so we'll get this moving on here to another one. I wanted to show you that Japanese yen chart, get you a pretty good idea of what we're looking at as we're watching some of these things unfold. Now, there was one other, I want to double check here, folks, live what we're doing here in the E-mini S&P, because we really are looking for, I'll get that up here so that you'll be able to see it again, but there is a really nice ABCD here. Hold on here just a second. There's where your 50% retracement came in. Well, you can't see that yet, so let me get it up here. Hold on. Okay, here's what we're looking at. We're looking for this move right here. That's what we're looking at. A, B, C, D. Now, we've already taken this high out. So that's a high probability we're going to make 18, gosh darn it, Larry, 38, 73 today on that one. So let's pay Watch that one, because if you sell that one, you put a 20-point stop on that. Folks, we were short that from 40.60, and that was a long way from, there was 100 handles down from the high, yet it was a perfect ABCD at the 382 retracement, just like we did in the crude oil about a half an hour ago. And I don't know if it's continued to go down or not, but let's see where we are here. Well, by golly, you're not going to believe this. This doggone thing went right back up again. I got to show you this because this is really a good one. It's really worth mentioning, and I want to get this up here. This is the one I want to see. And if I miss this, we'll have Rich Anderson on, and we'll have him talking about the yen. So we'll be right back. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we've got Rich Anderson on the line from Minneapolis, Minnesota. Balmy 80 degrees there today. Rich, how are you doing?
I'm doing great, Larry. You know, the weather's not this bad.
Yeah.
Just this bad most of the time. It's 10's the high today, I think, 10. And it's going to snow tomorrow and the next day. But a lot of exciting things. I wanted to wish everybody a very blessed Advent season. I always enjoy being on the show. But there's some stuff that's happening today, and Dr. Copper has a PhD in economics. I've always talked about that. Let's first look at the U.S., where we got the Fed fund rate above the 2-year. That's slowing things down. There's no question. But our Fed expanded our balance sheet from $4 trillion to $9 trillion, and we're bragging about lowering our inflation to 7.1%. That was the CPI last month. But the rule of 72, if you had 7.2 interest rates, you would double your money in 10 years, right? 7.2 into 72, 10 years to double your money. But if it's inflation at that level, that's cutting your money buying power in half. And so we're looking at how interest rates have been risen, 2.5% roughly.
Yep.
The Fed funds have been raised over 3% now, and we've lowered inflation by 2%. But a lot of that lowering of inflation was due to the strategic oil reserve being drawn down to the lowest level in the last 35 years or so. And, we can't continue to do that. That's off the table. And then you have Japan overnight saying, well, we're finally going to join the party. Everybody's been raising interest rates, the Germans, the Brits, the U.S. So they raise it 0.25%, and that causes their currency to go up 3%. Yeah. Well, what caused it to go up to 3% is that they've increased the buying of the bonds in Japan by 25%. They basically own the bond. In the 10-year, they own over 80% of the bond market. So, wow. It never trades. And of course, a 1% on a 30-year bond, a 1% increase in interest rates is like a 9% loss in your bond valuation. Of course, if you're holding to expiration 30 years from now, it's not lost, and that's the way governments look at it. It's just shocking. So this inflation fighting, it's going to be a tough road because you don't have the SPR to lower your gas prices. The food prices have come down very little. The one place where food prices have come down big is in China because of the COVID outbreak. The hog producers over the last couple of weeks have liquidated hogs like crazy, and the prices have dropped like 25%. There is one thing that's kind of interesting. We're starting to see some bird flu in various states. I guess there's 47 states in the United States that have had small outbreaks, but it amounts to about 57 million head of poultry. So that'll have some positive effects eventually on, maybe our pork and somewhat more on our beef, because our beef herd is down 3%. But this is a holiday season. The markets are down yesterday on weather forecasts in Brazil. They changed the weather, or in southern Brazil and Argentina. Uh-huh. They changed the weather forecast today, and that alleviated it a little bit in the soybeans. The January crop report's what's going to be the next catalyst that's going to make things move. We're going to have to continue to buy at least the number of acres we had last year in the corn. So, we're going to find some lows in here in the corn. We still have a major drought in the hard red wheat area. And so, they're not going to be willing to pressure the market. The funds are liquidating some stuff, but then they'll just be sitting on the sidelines. There's not likely to be a big press on the downside in the future here. But there's not going to be much upside excitement. So you just have to be patient. I'm looking at spreads where if Minneapolis narrows into Kansas City, another 10, 15 cents, you probably own Minneapolis, sell Kansas City. That's usually strong as you go into spring. I might add that we have way more snow this year than we did last year. Last year we only had 3.7 inches, and we're getting it this year. We're 4 or 5 times that amount. But we need the moisture. Any way you can get it, we need the moisture. There's no two ways about it. But
hey, Rich,
with the thing I sent you about the sea change that Howard Marks had,
yes.
It's a different world today. And he's one of the smarter guys out there, and you got to listen when he speaks.
Give the folks a encapsulation of what those, he was basically looking at his, 50-year career, well, almost 50 years, sea changes or change in economic thought. The first one was in 1974 when the bond market, when, Milken came out and made bond market, high yield market, no longer was junk bonds. It was a high yield market. And then again, he talked about the second one was in 2009 with the dot-com bubble. And he says we have opened the door, the sea change operation or changing continuity of thought now for the third one. And that's the one he said to be the most afraid of. So He's a pretty smart guy, and when you look at the charts, there's some reason why the NASDAQ is down as far as it is, and why Apple is down far as it is. Maybe what he's looking at is correct. What's your view on it, Rich?
Well, the cost of doing business, a major cost is interest rates, right? And interest rates when the interest rates are negative, you had zero cost doing business. So anybody could have a business and survive. But now when you all of a sudden are borrowing money and you have to pay for borrowing that money, the world's changed, and that makes the people more risk averse. And the oil companies, they're making more money buying back their stock than trying to drill for oil. Now in 2018, we had all these DUCs, that's drilled but uncompleted wells. All of that excess inventory is off, because it takes a 5-man team about 3 days to put a well into production. It's my understanding, 3 to 4 days. But there aren't any drilled and uncompleted wells to fall back on. The policy changes in the administration make oil a bad name. And I think what we're going to find out is that, I heard this on Bloomberg, that the oil and coal industry is going to look like the Sierra Club members when people finally start to realize the ecological damage of electric vehicles, because all the rare earth materials and stuff you need to build these engines, and then we don't have a way to, get rid of the engines or to get rid of the batteries once the batteries are obsolete. So it's,
I don't understand.
It's a different world.
I don't understand how they can keep the darn things in electricity, considering there's so many of them. And my daughter lives in California, right about a quarter of a mile away from a big charging station that's filled all day long, all night long, and it's an hour wait just to get in, and it's another 45 minutes to fill your electricity tank up. And the electricity is not cheap, as you know, so I don't know what the story is on that, but I'm never going to buy a car that I can't hear, no matter what happens.
Yeah, you like the sound of them.
Yeah, I like the sound of that rumble.
The key point is the world has changed, and there's a cost to doing business when you're borrowing money.
Sure.
And most businesses borrow money, and you're seeing that in the stock market, and you're seeing that in the stock prices, and you're going to continue to see that in the stock market and the stock prices, because the rest of the world, the Europeans are just getting started raising their interest rates, and it's going to change the dollar.
Yeah. Hey, Rich, we've got to take a break here. We'll get back when we talk about some grains.
All right.
Okay, we'll be right back with Rich Anderson, folks. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and I'm talking to Rich Anderson of Anderson Capital Management. Rich, you know Doug Schaefer quite well. You know, he was a floor trader in Chicago, and he's been out to visit. We've hung out with him in Vegas and other places, in Mexico. But I have a really funny story that you're going to like, Rich. You know, I play on the Sunday poker tournaments here in Tucson. They have Saturday poker. They have a football pool, and every time a team scores, they add $50 to the pot. Well, if you're playing 4-8 Hold'em, you got a $100 buy-in. $50 is a huge incentive. So you're looking for games where they score a lot. So I was talking to Dougie early in the morning on Saturday, and he knew where I was going, and he said, "For God's sakes," he said, "don't bet on the Colts." And I said, "Why?" He said, "They're the worst team in football." And so he was telling me how bad they were, and then he said they're playing the Minnesota Vikings. So I was going to give you a call, but you know I don't do any betting and stuff. But at halftime, the score was 33-0. And Minneapolis was losing 33-0. It was the biggest upset in the history of the NFL. You know how many games that is? That's thousands and thousands of games. And the guys at the table were saying, "Oh, well, they're gonna massacre them." And I said, "Wait a minute." I said, if the worst team in football can make 33 points in the first half, why can't the best team in football make 33 points in the second half? And they said, "Well, if you feel so strong about that, why don't you go over and bet it?" And I says, "What do you mean go over and bet?" He said, "Well, the betting, they'll take that bet." So I went over, and it was 26-1. In other words, if you bet $10, you got $260 back. So I called Dougie up. I said, "Dougie, you want to put $10? Against the Colts?" He said, "Look, I have season tickets." He said, "I can't even give them away." He says, "Can I bet more?" I said, "No, $10. I wanted to keep it 10. So it ends up winning the game. Minnesota wins the game in an overtime, and we collected $260 for our $10. So that was a proposition bet that I would take all day long. And it happened to be the only time in history that ever happened, Rich. I didn't realize that.
Yeah, I'm surprised that it was only 26-1 if it's never happened before.
Yeah,
but
it probably was more than Vegas.
That's why you have to have risk controls, because look at crude oil a couple of years ago. It couldn't go below zero, right?
That's for sure.
We found out that was a mistaken thing. So the assumptions we make are sometimes what can get us in the biggest trouble.
Yeah, that's for sure.
But talking about the grain markets is going to be pretty boring until we get to those January reports. It's just, we're going to, the funds are getting out of positions to square their books for the end of the year. After the first year, they'll start coming in, and generally you'll have the grain markets start to firm up because they're going to need to buy acres of corn, and they'll generally firm up through the first half of April or February, and then the government comes out with their outlook conference in the end of February, and that generally puts a top in. So I'm looking at, crude oil looks like it's put in a low. The grains look like they're going to hold here. There's nothing that'll that'll push them down very far, but there's nothing that's going to push them up, but they'll probably start to creep up. And, I'm establishing positions at this time of the year, looking for this normal seasonals to help firm things up. But our exports are way below a year ago. Bean exports are 5% below a year ago. Corn is 30% below. We need to export to China, but if they've just liquidated a bunch of their hog position, they're going to have less need for meal and corn. They're offsetting things. I just think that prices are going to find a trading range in here, and there'll be something to pop them out of these trading ranges, and there'll probably be weather down in South America. Argentina is on the edge of being critical. They had some rains here. The 11 to 15 day goes back to two-thirds of the country being stressed, and southern Brazil has some issues. And then, what happens in the U.S., particularly in the wheat. And, wheat's, $5 plus off its high?
I mean, $6, $6.50.
How can a market move that much? I mean, it's crazy.
Yeah, it is. How about the cost of the
So that's why I think there's some value in here, but it's not going to be very exciting for the moment.
What about the cost of the fertilizer? You gave me a cool chart. That's come down quite a bit, too. What's the story there?
Yeah, it's right. The last 2 years, the farmers have had the best, most profitable years ever. And this year, the prices are coming down. But then again, that's dependent on if things get squirrely over, and a lot of this fertilizer comes out of the Black Sea from Russia. That could all of a sudden change that. But right now, there seems to be plenty of it, and the prices are cheaper. They're still high, but they're cheaper than they were. And it also has to do with the availability of natural gas. Right now, the Europeans and the Brits are just trying to survive the winter and, live on the natural gas they've got. They only use their natural gas for heat and for electricity. They don't allow any of it used for fertilizer. That's going to change, but it's not going to change in the next 6 months, not going to change for next year. And so the prices have come down some, as like the price of wheat has. But fertilizer prices as we go into spring are going to firm up as the farmers start to buy more. And so they're not going to get a whole lot cheaper either. We're just at levels where there's demand for the supply that's available, and the supply has not increased.
Rich, thanks for joining us today, buddy. And we'll have you on again next year. Have a wonderful Christmas for you and Lisa and the girls. And I want to wish you the best, pal.
All right. I appreciate it. Always fun, Larry. You take care.
You bet, buddy.
Bye-bye.
Rich Anderson, folks. Folks, I have a special announcement here today. We need help. Let me tell you, you got to start looking up to the sky. We got somebody at our family here at TFNN that is in real distress. He's no longer at death's door, but boy, he needs got a lot of repair, and that is our good friend Tim Boss, Financial Cycles Weekly down in Florida. He's suffering from some type of a disease that flared up 25 or 30 years later, and it causes a not permanent, but a paralysis. He was in intensive care for a while. He's now in rehabilitation. He's going to make it. It's just going to take a long time. He figures a few months. So whenever you're saying a little prayer, look up to the sky and tell the old guy up there that or the old lady, whichever it is in your opinion, to say a few prayers for him, because he is really a super nice guy, and he really needs some prayers. So send that white light out to the dude, and I think you'll be repaid. I talked to him. He sounds great, but he just can't work, and it's going to be a couple of months. So we'll keep you informed of how he's doing. And I'm not going to be able to finish the last segment here, this last 2 minutes. Right after the break here, I've got to go. I've got to make an appointment, and it's going to be nip and tuck whether I can do it. But I'll see you folks tomorrow. We'll have Shane Smolian as our guest. And on Thursday, we're hopefully going to have our good friend Bill Meridian out of Cycles Research out of Vienna, Austria. So I want you all to have a wonderful week or another day off. Today, well, not the day off, but we'll see you tomorrow. So live every day in an attitude of gratitude, and may God bless.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.